the big difference between us and the government is that the government has the central bank to pay for things. So whenever the British government is making a payment, they ask the Bank of England to just increase the balance of a bank. And then that bank, of course, credits some more money to the account of whoever receives the total amount. And that's the way that they pay for things. And this is what we call the currency issuer. So the currency issuer can always make payments. The big problem is that the government in Great Britain is selling this fiscal black hole as the problem, whereas it's just a statistical difference between what the government has spent into existence and then the money that is taken out again from monetary circulation. So they got it backwards. So first the government spends money into the economy, and with that money that the government has spent, we then pay our taxes and the government gets its own money back. So yeah, there's all kinds of things that you can do with the resources that you have. And spending money is just activating those resources that you have. So don't be afraid of public deficits and public debt, but look at the results in reality that emerge from your economic policies.
This is the MMT Podcast with Patricia and Christian Riley. Hi, I'm Christian Riley and welcome to the Modern Monetary Theory Podcast. You can find us on Twitter at MMT Podcast, and you can support the show by going to patreon.com/MMT Podcast. If this is your first time hearing about MMT, you might want to listen to our first 3 episodes for an introduction, which I've linked to in the show notes, along with some other things that relate to this particular episode. And as ever, I've linked to where you can support this podcast financially via patreon.com/MMT Podcast. Support starts at $1 a month or £1 a month or whatever the equivalent is wherever you live. We're 100% listener funded. Your financial support really helps keep the show going, and your support in other ways, whether it's by recommending us to other people or just by listening and spreading the word about this stuff, really helps too. A big thank you to all of our supporters so far, and thanks as ever for the time you put into understanding MMT. Let's dive in. Welcome one and all to the MMT Podcast. I'm Christian Riley.
And I'm Patricia Pino.
And we're delighted once again to be joined today by economist and author Dr. Dirk Ehnts. Thanks for joining us today, Dirk.
Yeah, thanks for having me.
So we're going to do a post-mortem on Chancellor Jeremy Hunt's autumn statement. Dirk, do you have any overarching thoughts on it?
It's the stuff that we have gotten used to in the last couple of years or even decades. This idea that the government budget is just like a household budget and all the things that go with it. So this is more or less a normal kind of situation, but I think it shouldn't be normal, because once you understand that the government's way of using money and issuing money is completely different from households' finances, then of course you would understand that there's no such thing as, for example, a fiscal black hole. And that's what they use to frame this kind of thing.
Patricia, do you have an overall sense of the autumn statement at this point?
Well, I didn't have my hopes up very high, I have to admit. They were pretty low. But I mean, he hasn't gone as far as I thought he would go in terms of the ruthlessness of it. I think he probably was worried that some things were going to be too unpopular. But one of the things that I actually read on Twitter, and I'm wondering whether you could confirm this, is it true that they are still raising the cap on bankers' bonuses?
They are raising the cap, yeah.
Which is quite a sneaky thing to put in there, really, in a budget that is presumably all about saving money. Oh, and by the way, we're not going to tax this group, or we're just going to protect bankers' incomes because they're suffering the most in the economy.
Well, yes, we'll get to the purpose of taxes in a minute, but you just touched on it then, Dirk, the view about a government needing to balance every penny of spending with taxes or borrowing comes from a mistaken comparison where a government's capacity to spend is like a household's capacity to spend. So for anybody new here, would you mind saying why that's a mistake and why a chancellor should know better?
Yeah, well, the big difference between us and the government is that the government has the central bank to pay for things. So whenever the British government is making a payment, they basically ask the Bank of England to just increase the balance of a bank. And that's the way that they pay for things. things. So it's called money creation. They just increase the balance of some existing bank. And then that bank, of course, credits some more money to the account of whoever receives the total amount. And this is what we call the currency issuer. So the currency issuer can always make payments because the currency issuer is running the payment system. So it can mark accounts up and down. And that means that taxes, for example, and also bond revenues cannot be used to finance the currency issuer. But for us as households, for example, or as private people, we, of course, are used to this idea of financing things. So if I want to buy something, either I have to have the money before because I had some kind of income, or I would have to borrow money from a bank, for example, through a loan. And that would also be financing. And the big problem is that the government in Great Britain is selling this kind of fiscal black hole as a problem, whereas it's just a statistical difference between what the government has spent into existence and then the money that is taken out again from monetary circulation. So they got it backwards. So first the government spends money into the economy, and with that money that the government has spent, we then pay our taxes and the government gets its own money back, which is a little bit like in a cinema. When you go to the cinema and you hand over your cinema ticket, they just throw it into the garbage can. It's an IOU. That's what it is. So the government always has money, and it should not pretend that it needs to cut down spending because somehow there's some kind of limit of money, for example. The limits are always limits in terms of resources. So, for example, that maybe there's not more unemployed people to be employed, or there's not more energy to use, then you would say the government should maybe decrease spending because maybe the private sector needs those resources more urgently, or maybe because we're running out of resources in total. That more or less sums it up.
And today you commented on a talking point from the German press, but I've got the translate button on my Twitter feed for now, before Twitter loses all of its staff. I'm taking advantage of that. And but this talking point from the German press, and it's common in the UK press too, is because of the disastrous financial policy of short-term Prime Minister Liz Truss, Jeremy Hunt and Prime Minister Rishi Sunak now have to calm the markets. Tell us about your reaction to that, Dirk.
Yeah, that's the usual bond vigilante story, that they kind of pretend that if they don't manage the public finances well, then the international investors will sell all the government bonds. Then the price of those government bonds will go down, and maybe the government runs out of money because they cannot borrow anymore. This also, of course, comes directly out of this idea of running the budget of a government like a budget of a private company or like a household. It's political theater. So they just try to maximize their votes. And because people don't understand how the monetary system works, they just pretend to care about public finances, and this gives them something to talk about. Otherwise, it would be a very bleak message if they would just tell the British public that, well, you're going to get a lot poorer and you will lose roughly 7 years of income gains. And there's not a lot of hope that you will come out of this kind of hole. So this kind of public finances approach gives the government something to talk about and to put the blame on these kind of supposed monetary issues.
When the Truss was going through all this drama, even lefties were sort of lashing onto this narrative that, she's going to wreck the economy because we're going to run out of money, we're going to have to go to the IMF, etc. That was feeding into this view of the priority of the Prime Minister should be to appease markets, not to listen to the electorate, not to listen to anything else. Markets are what rules this country, and everybody else is subordinate to that.
It seems to me it's all about plausible deniability. And so in his autumn statement, Jeremy Hunt was very quick to say that he supported the BOE, he wouldn't be changing its mandate, whereas Truss and Kwarteng, there are interviews with them, media appearances where they were hinting at maybe something that the BOE needs to change. That was, before they were actually in their jobs at the helm of government. But I thought it was telling that Jeremy Hunt was like, look, let's just step on that one straight away. Nothing's going to change at the Bank of England. And to me, it's like politicians, especially the ones in charge of steering the economy, crave this plausible deniability so that if there's a helpful story out there that people believe, in this case, it's that the BOE is really in charge of the economy. So that thing that you hate, inflation, if that's out of control, then that's the Bank of England's fault. Don't look at me, the actual politician in charge of what the government spends on and who it takes money from. I'm not even allowed to interfere, even if I wanted to. That's What's the price of freedom? And, I just think this unnecessary smokescreen is the next frontier in the battle for economic justice. I think we need to severely shrink, curtail, change the job description of the Bank of England. I think something's got to happen there. But what do you guys think?
Yeah, I agree. I mean, it's a political system in which this kind of thinking is entrenched. Apparently, there's social networks of people who believe that the government is not to be left alone in making its decisions about how much money to spend. I think these people who are doing this, they kind of probably know that it's not correct, but they think that they are doing something which is good for the public, because many of them probably think that you shouldn't trust the government too much, and that you should have more power with financial markets because they are more efficient. I mean, the global financial crisis kind of dispelled all those myths, and the efficient market hypothesis is now nothing but a laughingstock. But these people are still in power, and they just pretend that nothing has happened. Whereas we can see, like the 99%, more or less, I would say, we can see that the economy doesn't work for us. Wages are not growing, prices of houses or rents are going up. Yeah, there's now this big gulf, and we need to change that narrative.
Absolutely. But I do worry that if MMT's narrative on government spending gets accepted, then the only logical conclusion is that the Bank of England or central banks don't have or should not have the functions that they're currently assigned. And I think that is inevitable, but that's going to find quite a lot of resistance there in there. Yeah, so it'll be interesting to see what the fallout on that is.
I mean, right now, the central banks are the bank of banks, is the bank of banks. And I think there's nothing wrong with that. So yes, banks can borrow from the central bank at the interest rate that the central bank sets. And the central bank is also normally the bank of the government, making payments on behalf of the government. And I think these are the two main functions of the central bank. And I don't think that we have to disagree with those two functions.
I think it's maybe more on the kind of employment side, because the MMT narrative, which talks about fiscal capacity in a completely different way as people currently do. And it talks about employment being ultimately your fiscal space. So it sort of highlights the absurdity of not having full employment. But doesn't that sort of undermine a little bit what at the moment is perceived to be the central bank's job, which is to adjust levels of employment to control inflation?
I totally agree. And something that you said in a previous episode, Patricia, got me thinking about this, that it's interesting that fiscal policy needs a watchdog, which is what the OBR is. But monetary policy, the thing that politicians say is really in charge and really in the driving seat when it comes to economic management, no watchdog required. And, when you've got central banks saying things like, we have no working theory of inflation, going back to maybe Dirk's point, surely it's time to just replace them with an app.
Yeah, I mean, the central banks, they're using this oversimplistic idea of inflation targeting, and they got it backwards, as Warren was correct to point out from the beginning. So higher rates should normally be expansionary, at least in the longer term. And the idea that you can somehow get inflation right by moving interest rates up and down, it looks very strange right now. I mean, there's lots of people also in central banks who are now saying that what brought inflation up in the 70s was the oil price, and what brought inflation down again in the 1980s was not central bank policy, so high interest rates, but instead was the US shifting to natural gas, which they had domestically. And then they stopped importing oil from Arab countries, for example. And that meant that there was less demand for oil, and then the oil price fell back. And that's how the inflation problem went away. And I think that even the mainstream is now waking up to see inflation as a very complex kind of phenomenon where two inflations are never alike. There's always different reasons for firms to increase prices. And I think there's a lot of movement. And you're right. I mean, the Fed with Powell, they kind of confirmed that they have no working theory of inflation. But that's a good thing. I think today also, or yesterday, Christine Lagarde from the ECB, I think she pointed out that raising interest rates will not lead to lower rates of inflation in the short term. that was a good thing to say, maybe a little bit late, but it's correct.
Yeah, just to go back to something you touched on a minute ago, which was higher rates are likely expansionary. Could you just quickly say why that is for anybody new here?
Okay, so the interest rate set by the central bank means that banks which have reserves at the central bank, so deposits at the central bank, they get paid this kind of interest rate. And if they are buying government bonds, they also get some kind of interest rate. And the banks can always choose whether they want to buy government bonds with one interest rate or to just leave their money with the Bank of England and collect some kind of deposit rate. So the government bonds interest rate, it has to go up when the central bank's interest rate goes up as well. So it has to mirror the central bank's interest rate. So that means that when the central bank is increasing rates, then those people who have government bonds, they get high interest rate payments. At least those people buying the new government bonds, the old ones, they don't change their interest rate. That means over time, when you raise rates, you increase government spending on interest rate payments. And that's, of course, some kind of additional income for people who are not working, which in terms of inequality is not the right way to go forward. But since people, the bondholders, will have more money than before with higher interest rates, they will probably spend part of it, not all of it, but maybe a part. And that means that aggregate demand goes up because now the private sector, so households and firms, they have more money available to buy goods and services. And what works in the other direction is normally the housing market. So higher interest rates also means that people pay more interest to banks, which means if you take out a loan of, say, £300,000 and you have to pay an interest rate, well, then you can spend less on the house itself because you have to pay that interest. And that means that house prices normally go down when interest rates go up, at least in the short term. Over the long term, normally house prices are more or less a function of nominal income. But yeah, these two effects, they are very hard to predict. So we never know when interest rates go up, which one happens first and which one goes second.
I'm glad, Dirk, you clarified there what happens, that the interest rate rise only affects newly issued bonds. But I have a question that I get asked a lot, and it gets me thinking. If the central bank is undertaking QE, in what order do things happen? Say interest rates rise, newly created bonds are created with the new interest rate. Are they sold first to the private entities and then bought back by the central bank? And therefore the central bank sort of pays a premium based on the new rate of interest on those bonds? Or do they get bought straight away by the central bank and therefore QE sort of diminishes that income stream of interest rate to the private sector?
I think it depends on the country's laws. So in Germany, for example, the German central bank is allowed to buy directly from the auction of the government. Probably they're technically not buying, but they're basically withholding government bonds and put them on their balance sheet. They can do that to smooth the bond prices and smooth the yields also. That's why they can do that. But I think it's very likely that in most countries, QE means that first, when the government is selling bonds, they sell them to banks. And then those banks turn around and sell them back to the central bank for a little bit more money than they purchased those bonds. I mean, they make probably a couple of millions and maybe tens of millions over the years, but I think it's nothing scandalous. So yeah, I mean, they make more money, but I think if you want to cut down banks' earnings from selling government bonds, there's probably other ways to address these issues.
So when the central bank is buying back these bonds in those countries where the legislation says that it has to buy them back from private investors, that premium that is paid above what the private investor paid in the first place, is that proportional to the new interest rate?
What matters most is the market price. Okay, so the central banks don't have to care about a profit, but they would be looked at in a strange way if they would start to buy up government bonds at very high prices, because then participants in the markets would start complaining and say, look, this bank sold some government bonds to the central bank and they overpaid. They paid much more than the market price. So what the central banks are doing is they just pay the market price. So if bond prices are down, for example, in England a couple of weeks ago, they will start buying, but they start to buy at market price. And then when the market price is rising because they are buying, they ramp up the price to buy whatever they want in terms of quantity. But the arbitrage stuff is what makes bond prices connect across different maturities. So if the central bank is buying up a lot of short-term government bonds, like 1 year, 2 year, and they will be increasingly scarce, and some investors will not mind and say, okay, so if the central bank wants those 1 and 2 year maturities, I can sell them for a good price. So I buy instead 5 year, 10 year. And then, of course, by buying 5 year, 10 year bonds, their yields will come down because the price is going up because of the additional demand.
Got it. And that changes the slope of the yield curve, basically.
Yeah, and it's the investors with their preferences who are responsible for that, if the central bank chooses not to intervene directly.
Yeah, while we're on the topic, in your article, which you wrote for GIMS, and it's called Will Rising Interest Rates in the Future Bankrupt the UK Government? And you retweeted that article recently. But in that article, you take aim at this very popular idea in mainstream economics that's used to justify austerity. And that idea is that if the interest rate on government debt is higher than the country's growth rate of GDP, the debt to GDP ratio becomes unstable because it will grow to infinity. And the only way to avoid that is for the government to run a surplus. So the government running a surplus means the government take more spending power out of the economy that it puts in. It taxes more than it spends, which diminishes the private sector's spending power, i.e. it makes us all collectively poorer, also known as austerity. And this running a government surplus recommendation exists out there as a serious proposition doing real damage, and it exists because of how a tiny sliver of humanity called neoclassical economists feel about debt to GDP ratios.
I'm afraid that it's not only neoclassical economists who are talking like this, but also a lot of people who call themselves progressive economists. They also claim these kind of things, that if the interest rate is higher than the growth rate, that there will be trouble and there will be government debt spiraling out of control. So this, of course, when you frame it like this, it doesn't matter whether you are calling yourself a progressive or a left-wing economist, but if you frame it like this, people will know from what you have said that there is some kind of limit to government spending. And if you are across that government spending limit or public debt limit, however you want to define it, normally these people are not normally very clear about what is public debt and what is government spending. They kind of mix them up. But then the people who listen to this stuff, they just think, oh, okay, so there's some kind of problem with sustainability of government's finances. So whom do I trust in closing that fiscal black hole? And then, of course, you can have a situation in which the Tories are very popular and people trust them to close down this kind of fiscal black hole because all those bankers are with the Tories. And then, of course, Labour will look like a party which is irresponsible and just giving out money for workers, stuff like this. So with this kind of framing of sustainability of public finances, you are doing us a disservice. We should have an honest debate. And in that honest debate, we should always say that the taxes are not the money that is paid by us to the government, but it's the resources that we as the private sector give up and hand over to the government. That's the tax. Okay, so we have lots of people working as doctors, for example, and nurses, and maybe also professors working for the public sector in the United Kingdom. And these people are not available anymore to work in the private sector. That's the resources that the government is needing to fulfill its public purpose. And that's the story that we should talk about. Of course, if you can just make all the payments as a government by creating money, so it's actually the Bank of England which is doing it. But then, of course, it doesn't matter whether you are paying a nurse or a professor or a medical doctor, or you make an interest rate payment. It's always the same kind of thing. The Bank of England is just marking up an account of a bank, which is a digital number on their software. And that's how you get the money going. So it doesn't matter how high interest rates are. It doesn't matter how high public debt is. You can always make those payments. So I'm not saying that you should spend to reach infinity, but you should spend until you get to full employment. And if you have scarcity of resources in some other sectors, it will show up as inflation. And I think it's very important for us to get this narrative right. The way that, for example, the mainstream is using this idea of fiscal space, I think that's the way not to go. we should stress full employment, and we should stress that we would like to see sustainability in terms of resource use. I think that's much more important. So I think fiscal space has kind of robbed the place of full employment over the last couple of decades. And I don't think that it's easy to re-educate the public to understand what fiscal space really means, because it's pretty complicated. So I think it's easier to say we want full employment, we want to make sure that everybody has a job, and that's the goal of economic policy. And if there's too much unemployment, if there's no full employment, then we should have expansionary economic policy.
While we're on the topic of framing, you kind of brought that up there, Dirk. Apologies to regular listeners if you've heard this before, but I think a large part of the problem with economics and fiscal policy coverage in the media is the depiction of government bond issuance as borrowing, and government bonds therefore as government debt. And so when yields go up, the story in the press is that the cost of borrowing for the government has gone up. So now imagine if your cost of borrowing went up, regular person, what you could spend would go down. And that's why we've got to keep markets happy. Otherwise, they could punish the government with high yields, which would choke off the government's capacity to spend. So we have to keep markets happy. But I think it all starts with this framing of government bond issuance as borrowing. So while we're waiting for the government to figure out that it doesn't need to issue bonds to be able to spend, what's a better way to frame what happens when the government sells a bond?
The way you would have to explain it is that once you understand that money creation is what happens when the government spends, then of course you are wondering about what happens to that money. So when the Bank of England credits the account of a bank, then that bank has more deposits at the central bank. They cannot lend out those deposits to us because it's central bank money. So I don't have an account at the Bank of England, and I suppose you don't have an account at the Bank of England either?
Not yet. I keep writing, but
yeah. So I mean, there's some people talking about digital cash provided by central banks. That would be us having accounts at the central bank. That would be one possible solution. But we're not there yet. So the banks, what they're doing is they're offering those funds, those reserves, they're offering this kind of central bank money on the interbank market and say, okay, who wants to borrow that money because I don't need it? I want to lend it out, maybe for a day, overnight, or maybe for a year. And then, of course, when the government spends, and all the banks receive more money, they will offer all that money on the interbank market because they would like to lend it out and collect some kind of interest rate. And if everybody's trying to lend out and nobody's borrowing, then of course what happens is that the price adjusts. And that means that the interest rate on the interbank market goes down because there's more money. So how to get that money out of the market? And that's when government bonds come in. So you're mopping up the liquidity, you're mopping up this kind of extra money on the interbank market. So you're telling the banks, wait, before you want to lend out to any other bank, I have a juicy government bond here, which offers you a nice interest rate. So how about that? And then the banks, of course, say, oh, well, okay, that seems nice. And the bond trader has a lot of maturities as well. So there's maybe notes and long-term bonds and something in between. So whatever the bank wants to do in terms of giving up this kind of central bank money in terms of maturity, there's a perfect offer by the bond market. And that's how you get rid of this kind of money that you create when the government spends. And this stabilizes then the interbank market interest rate. So if you would not do that, it would mean that every time the government spends a lot of money, the interbank market interest rate would go down. And every time you collect a lot of tax revenues, the interest rate on the interbank market would go up. And that's not supposed to happen. So banks don't want to guess where tomorrow's interest rate is. And also we don't want to do that. So if you have a mortgage, you don't want to wake up in the morning and then be afraid of interest rates going up on the interbank markets, because this is probably the basis for your contract, for the interest rate in your mortgage. So that's why these kind of bond issuance mechanisms were designed in the first place. Technically, we don't need them anymore because now we pay banks an interest rate for their deposits held at the central bank. But that's how all of this came to be. So bond issuance is an operation to stabilize interest rates on the interbank market. It has nothing to do with financing. As Stephanie Kelton always says, the government is giving you yellow money bonds for your green money central bank deposits. And that's all they're doing. They're not adding, not subtracting money. They're just changing the liquidity of the money that is in circulation.
I always say swapping non-interest bearing pounds for interest bearing pounds in the case of gilts. And in a way, it can help to simplify how people understand quantitative easing as well. If you imagine quantitative easing as the central bank buying back those bonds, it's as if those bonds weren't issued in the first place. And so the idea is you have the interbank interest rate falls very low. And that's what we've seen, very low interest rates, whereas the more conventional money story was, QE is printing money, they're injecting it into the system and it's going to obviously result in hyperinflation. But, they weren't quite seeing the whole joined up system.
Yeah, they kind of forgot that this kind of central bank money is not finding its way to the real economy. So if we could borrow this kind of money that is created with QE, then of course there might be a slim chance maybe that this would happen, but we can't. So when banks make loans, they just create new deposits when the loan contract is signed. They cannot lend out central bank money to us. It's just technically impossible. So it's just like if you don't have an account anywhere in the Bitcoin universe, for example, I would not be able to give you Bitcoin because you don't have the account, the technical setup to receive it. And that's the same with central bank money.
To build up on that, what is the relationship, or is there any relationship between the reserves, basically government-created money, versus the amount of loans that banks can issue? Because in reality, what happens is that the loans are purely sort of a function of the solvency of the private sector. But that is in itself indirectly related to the number of reserves. Is that right?
I think that the banks, you've probably figured that out, they want to maximize profits.
Yeah.
Okay, so if there's lots of borrowers and they walk into your bank and they all have good collateral and they've done wonderful things in the past, why not lend to them? You will lend to them, and then regulation kicks in. And if you need to borrow reserves because you have some kind of required reserve ratio, like we have still in the Eurozone, I think in England you don't have that anymore, then you borrow reserves. If your clients want to see cash or they make bank transfers, well, then you also, you borrow reserves in the bank market, you borrow reserves somewhere else. If the regulators tell you that you have to increase equity, you sell some shares. But if business is going well, and that means you have to have more capital, then of course it will be easy to sell those shares to the public because you can say, well, look, I made lots of nice loans. Now I need more capital. So who wants to jump into my party or join my party here that I'm having? So lots of profits. So that shouldn't be a problem. So I don't think that there's any kind of connection going from reserves to loans. I think Knut Wicksell, in his book Interest and Prices in 1898, he more or less said there is nothing like a supply of credit. It doesn't exist. So there's demand for credit, and then the banks, they can either satisfy it and say, okay, loan contract signed, here's your deposits, we just keystroke them into your account. Back then it was by the stroke of the pen, of course, when Wicksell was writing in the 19th century. And that's all there is to it. But the central bank has to adjust, and they have to put forward the amount of reserves that the banking system needs, because if the banking system falls short and there's not enough reserves, well, then either they cannot pay out cash to their customers because they don't have the reserves to translate into cash, or they will not be able to make some payments. So some of the transactions will blow up, and the banks will tell their clients, sorry, we were not able to transfer your money because the Bank of England did not give us enough money to work with. And of course, it's not the task of the central bank to blow up the payment system, quite the opposite.
So banks can borrow reserves from the central bank whenever they need reserves. So there is, no issue with that. But they also, at the moment at least, they have to give bonds as collateral. They're basically almost exchanging one type of money for another. So is it right to say there is no connection with reserves, as you're rightly indicating, but there may be a connection with the overall wealth, well, the combination of bonds and reserves that are out there at the moment?
Yeah, I think I understand what you're getting at. Let's see. Let's go back to 2008. And so in 2008, we had this global financial crisis, and banks had the problem that they needed to borrow a lot of money because they needed to make payments to other banks and to other financial entities. And the quality of collateral was declining. So because of real estate markets going down, quality of collateral was going down as well. If you borrowed against collateral and the value of collateral goes down, and I mean, real estate is prime collateral, of course, then of course it means that under the existing rules, you will have less eligible collateral. And the central banks, of course, they figured that out and thought, oh, oops. So now that real estate markets have tanked, our banks have lost a couple of tens or hundreds even of billions of dollars in the US, or tens of billions of euros in Spain and Ireland worth of collateral. So that means they will not be able to borrow money because they have no collateral. So what you have to do, and that is one of the most important aspects of central banking, you have to fiddle with the collateral requirements. Okay, so in a crisis, you have to relax your collateral requirements, and you have to accept collateral which is probably not so good. So you have to act as a lender of last resort. And if you want to do that, and you're in a crisis, there's nothing else you could do. You have to accept less collateral and less quality in collateral. And that's what happened.
So the rules are basically accommodated to ensure the solvency of private banks.
Yeah, the banking system as a whole. So if the banking system as a whole has a problem, the central bank has to lower the standards for eligibility of collateral. But if you are a single bank and you give away a lot of bad loans and they don't come back, then you will be closed down by the regulators because they will tell you that you're running out of equity and your collateral is no good. But the other banks don't have the problem, so the central bank leaves you alone and says, look, it's your problem. The other banks are okay, and we're not here to save all banks.
So I think we've settled it. There's absolutely no connection between lending and reserves, or lending and even the total quantity of reserves and bonds.
Yeah, I agree.
Well, something that Warren's said more than a few times is the banks that were propped up in the aftermath of the great financial crisis, it wasn't that the Fed gave them a bailout, it was that they gave them what he called regulatory forbearance. They relaxed capital requirements. I guess, is that the kind of short way to say what you just said, Dirk?
Yes. In Europe, the example would be Spain. So back in the late 2000s and early 2010s, the property bubbles were the biggest in Ireland and Spain. And the ECB, together with the German government, they kind of forced the Irish to nationalize those banks, because German banks had been lending, I think, probably hundreds of billions of euros to Irish banks. And the Spanish looked at Ireland and said, okay, so that private debt by the banks has now turned into public debt, and that's not what we want, right? So I think both Ireland and Spain, before the crisis hit in 2008, they had roughly 20 to 30% public debt to GDP ratios, very, very low. According to the European Union, both were success stories economically. So they said in Spain, we don't want what happened in Ireland. Their public debt has blown up, and now the public has to pay for all of that. So let's change the rules for accounting. So normally you would have to put equity into the Spanish banks because of all these bad loans, right? And the Parliament of Spain just said, okay, let's create a law. And the law says that we allow our banks to not write down the value of bad loans. Okay, so of course, if you create the illusion that those loans will be repaid at full value and you can have them in the balance sheet at full value, then of course you have no problem with the equity. You're not making losses officially, right? I mean, everybody knows it's just a charade. It's just a joke, basically. But they had this law, and every single year they gave that law another year of life. And they said, well, the banks are making profits, and they can use those profits to build up equity cushion. And then over time, we can write down these bad loans. But that means we don't have to nationalize those banks. We can stay with a low public debt to GDP ratio, which has blown up to kind of close to 100% of GDP anyway by the time that this issue got hot. So that's what you can do. I mean, banks can create money and the government can create money via the central bank. And just as the central bank can always create money, banks also can always create money through lending. And if you want to close them down, you normally close them down because of negative equity. But if you remove this rule, they can lend out forever. And it's one of the astonishing lessons also from the global financial crisis, that we have to have more regulation for the banking system, because otherwise they create hundreds of billions of euros and pounds worth of bad loans.
So you tweeted, Dirk, about a Bloomberg article. The headline was, the UK faces £133 billion bill from the BOE QE, wiping out the last decade of income. Can you tell us a little bit about what you disliked about that article?
Yeah, well, here you have the central bank of Great Britain, the Bank of England, and they are the monopoly supplier of currency. Okay, so nobody would ever doubt that they can make more payments. Why not? Because that's the only place where you get your pounds from, in digital form, but also in cash. So you wouldn't mind if they would have, I don't know, negative equity or positive equity. It really doesn't matter. They can create money with their computers, and they can mint that stuff, and they can also print money if they wanted to, which MMT is not about, as we all know. So if they have a big hole in the equity, so if they make losses, then equity goes negative. In terms of the operations of the central bank, nothing will change. It was easier to understand in the good old times when they were really printing money. Okay, so imagine a central bank which does not have a computer and they're just printing money. And then somebody will tell you, you better look out, that Bank of England there with the printing press in the basement, they're bankrupt. And then you approach the Bank of England kind of curiously, and then you're wondering, okay, so probably they don't have any more money. And you see the printing press, which is running. And then you will say, well, I have some euros here. Can I get some pounds? And they say, yeah, sure. I mean, why would you doubt their ability to print more money? It doesn't matter whether they have a lot of debts and liabilities, because they are the source of those things. And that's why it's so strange to see in the mainstream press this idea that there's another black hole now, not a fiscal, but this is like a central bank black hole of 133 billion pound, as if this would mean something. I mean, it's not a bill that you send to the taxpayers of the United Kingdom, but that's the framing that was given to this article. It's kind of weird because, as said, the Bank of England is the monopoly supplier of currency, and to kind of pretend that they are having balance sheets problems, I mean, they are the only source of money. If they need more money, well, let them create by the computer 133 billion pounds. I can tell you what the ECB would do if this would happen there. So the ECB says on its webpage, they have a section which is called profits and losses. If you just Google ECB profits and losses, you'll find it. And in the very last paragraph, they say, well, we put some money away for times in which we have losses. And if the losses are really, really big, we would ask the other national central banks to contribute. And if that would still not be enough, we would offset those losses with a new asset, which we would call future revenues. Okay, problem solved. Okay, then the balance sheet is okay again. Balance sheet balances. Equity does not move because the losses, they create a big liability, but it's offset by an asset which is called future revenues. Period. Okay, so the ECB cannot have negative equity. It's impossible because of the way they set up the accounting structure. That tells you everything. There's no way that you need accounting for a central bank. They create money. And normally why do we do accounting? I mean, it's tedious, and I've worked in accounting. So I did the accounting for Saab Switzerland about 20 years ago in Barcelona. Of course, you do accounting for Saab Switzerland because you want to know whether the company makes money and whether it's solvent. Okay, and international investors want to know about these kind of things. But a central bank, they're always liquid and they're always solvent. Or even if they're not solvent, it doesn't matter. So yeah, that's why the normal accounting rules don't apply to central banks.
I quite like the framing in it as well, where it says the hefty sum stems from a deal struck a decade ago, which meant the government benefited from many gains bought by the BOE under its QE program, but also needed to cover future losses. It's also a deal. So it sort of frames it as a negotiation between the Bank of England and the government, as if, emphasizing the fact that they're separate entities and the BOE is entirely independent. Whereas the reality is it has to do as it's told, basically.
I always say with these things, when you see the Bank of England, substitute the government for that because it's part of the government.
Yeah.
And then read the sentence again and you'll find it will be the government owes the government some money.
Yeah.
and it's like complete, right, left pocket, right pocket stuff.
Yeah.
But the other question I wanted to ask was, this comes from the offloading of the bonds that were acquired by the BOE during QE. Why is the BOE offloading the bonds that it previously bought?
Yeah, that's a good question. Now it's really a good question. I mean, because if you hold until maturity, there's no loss. Let me give you an example. So you have a government bond with a maturity of 1 year and it pays zero interest rate. And then you have new government bonds, which also have a maturity of 1 year, and they are sold with an interest rate of, let's say, 10%. So, of course, the market price of the 0% bond will go down. Nobody will want to buy it because it gives you 0%. If I could buy it at 90 and it pays out 100, that would give me 10%, actually a little bit more, like 11, but never mind. So the market price goes down in order to reflect that there's other bonds on the market which have high interest rates. And that is why my zero interest rate bond is very unattractive. So I can either sell now, but I can only sell for 90.9 pounds, my 100 pound bond. So I might make a loss. But if I just wait it out, I can collect the 100 pounds that I was promised by the bond when we reach maturity. So yes, why would you unwind now? It gives a lot of profits to those people buying the bonds. I think that's probably why they do it. So I think that's not a coincidence. You're giving away bonds at a very low price instead of waiting to maturity, because the Bank of England is not forced to make position, as Jaime Minsky always said. They can hold their assets until they reach maturity. They are not forced to sell at fire prices ever. So I think it's probably a political thing here, that the banking system tells the Bank of England it would be nice if you could offload your bonds right now, because your bonds will be very cheap with interest rates that are now higher than before.
And to add to this, my understanding is the Bank of England doesn't charge interest on the bond, so it returns any interest payments on these bonds to the Treasury.
Yep.
Because it would be quite absurd for it to charge interest on it. So at the end of the bond's life, when this final kind of coupon payment is done, wouldn't the Bank of England simply return that to Treasury?
Yeah, I mean, that's how it works. That's why it's so strange to see all of this happen, because I think that most of the people who are in the markets, they understand how it works, but they make money because there's many people who don't understand how it works. I think Michael Pettis, an economist who's in China, he wrote a book once, 20 years ago maybe. It was called The Volatility Machine. And he talked about financial markets generating lots of false information, because you can only trade when people have different beliefs. So it's kind of normal to think that the financial press is pushing forward different kind of ideas and theories, because with that kind of volatility, that's what markets are thriving with. So you need trades in order to collect money if you are a bank or financial investment company. I think that's why these kind of ideas, which are clearly wrong, that's why they're still around, because you can make money with that.
Yeah, you need tension between competing beliefs.
Yeah, and you need suckers for your game. If you are
to put a finer point on it, yeah.
Hashtag Bitcoin.
I mean, there's this idea in financial markets, there's a saying, in every trade there's an idiot. If you don't know who it is, it's you. And that's how it is. I mean, it's a zero-sum game. If we swap assets, of course, there will be a reason why somebody's willing to give up an asset, and that's because that person thinks that he or she can make money with doing that. So you have to be careful.
So back to the impact of the autumn statement, the Office for Budget Responsibility projected that living standards will fall by 7% over the next 2 years based on what happened in the autumn statement. The Institute for Fiscal Studies are saying that the British people just got a lot poorer. It's almost like taking money out of the economy takes money out of the economy. But this think tank, the MMT podcast, says it doesn't have to be this way. Why is it not a case of just, bad economic weather happened and now we're just going to have to battle through? How could we do things differently?
Yeah, I think that once you realize that the government is a currency issuer and it's not like a company or not like a household, then of course you will also understand that there's no financial cost to spending. I mean, if I give up £1 because I buy something, then of course it costs me something. But in terms of costs, if you are the government, you can create this money for free. If you buy something for £1 million, you just type it into existence. So what is really the cost? Well, the cost is that you are using those resources for your public purpose, and they will not be available for anything else anymore. So there is a cost to government spending, which is the opportunity costs of whatever you're using in terms of resources. So you could then reimagine economic policy and say, look, let the government net spend into the economy so that you have full employment, that you have price stability. And if there are some sectors where you have prices going up because there's not enough capacity, well, the government can help to create more capacity. And there's all kinds of policies that you could use. So you can be very creative. For example, if you do not have enough lorry drivers, you can increase the wages for lorry drivers, or you can try to get some foreigners to come to your country and work in those jobs. Or you can try to have better technology so that you have self-driving lorries. You can try to beef up your train transport system and have more freight trains. So yeah, there's all kinds of things that you can do with the resources that you have. And spending money is just activating those resources that you have. So don't be afraid of public deficits and public debt, but just look at the results in reality that emerge from your economic policies and then try to adjust. So of course, we make mistakes. You try to learn from your mistakes and try to create more resources in a different way if you think that you have not been successful. That's what we could do, but we should scrap all these fiscal rules. I think there were 6 of them this decade or in the last 10 years, and now there's 2 more with this statement. I don't think these fiscal rules are helping us to get where we want to be.
So with our money system, as Beardsley Rommel wrote many years ago, taxes for revenue are obsolete. But taxes have distributional consequences. And with the autumn statement, Jeremy Hunt failed to reform how the rich and the ultra-rich are taxed. Dirk, what might be a fairer way to do things as you see it?
I think the easiest way to go forward is to just reverse what we have been doing over the last couple of decades. So what we have been doing is, in Western societies, we have been increasing VAT, for example. So value-added taxes normally fall disproportionately on the lower 99%. So VAT should go down. And all these other taxes, like business taxes and also taxes for income taxes, these taxes should go up. If you have some kind of wealth tax, that's good. Maybe you can ramp that up as well. And if you have a land tax, the same here. So tax people more when they own land. That's the way that we should go forward. But I also think that market incomes are not just. So if I see in the newspapers that I think the 25 most successful hedge fund managers from the United States, their yearly income in 2020 was on average more than $1 billion. If you have this kind of market results, there's no tax rate that you can put on these kind of incomes to make it just. So I think we should also look at institutions and try to reform institutions that perpetuate inequality. And we should try to strengthen those groups in society which are suffering the most, and also reverse, for example, this long-time trend of falling union membership. I think it's a very complex topic. I would be glad to talk about this maybe in the future in more detail.
Patricia, did you have any thoughts about the approach to tax?
I'm sort of getting my head around that recently, but I think probably along the lines of what Dirk said about taxing land as the primary source of kind of taxation. I don't know if that would be enough. I'm saying it because I know a few people are sort of working on this and on this idea that, well, could we accomplish progressive objectives through taxing land and, for example, abolishing income taxes? I don't know, but it's a good start. But then I would like to see a bit of work as to how that also relates to rents, and whether, similarly to what you might expect with corporation taxes, there might be intention to pass these taxes on, to people who rent rather than the people who own the land.
One area where taxes for revenue aren't obsolete is if you are a currency user, like private sector individuals and firms, and local councils are also currency users. And it looks to me like the council tax measure in the autumn statement, where councils are able to raise council tax bills now by 5% instead of a 3% limit, which was what it was until the statement. I think that's a way to push the accountability for underfunded local infrastructure away from central government to councils. Did you have any thoughts on that?
I think that's a trap, basically. I think when they talk about, they've passed a few policies that seemingly make it easier for councils to raise money, but actually, when you understand that the ability of councils to raise money is heavily connected to central government spending, you see that that's actually, empty promises. If you remove central government funding for councils, then they'll be more and more reliant on the wealth of the pool of people that they can tax within that council. And that means councils that have more poverty will be less equipped to be able to tax appropriately for the services that they need to provide. And it's just a race to the bottom, really.
So let's turn to Brexit. It's a thorny issue, but I think we can objectively say that historically the ECB and the Euro system put rules in place that hurt the economies and the peoples of certain Eurozone member nations. And for that reason, I was sympathetic to the case that the Lexit people were making for the UK leaving the EU. All that said, it does seem like at least the way we've left the EU, to my reading of the situation, not having any trade deals in place, not much urgency to get any in place. That's all hurt our economy. Full disclosure, I did vote Remain, but I was happy to accept the result of the referendum, happy to accept the idea that other people might know better. Well, of course, I'm not happy with where we are now, but I want the way we go forward out of the EU to work. You know, I'm not second guessing the referendum or anything like that, but it is looking like at least the way we've gone about leaving the EU hasn't benefited us yet. I'm happy for somebody to put me straight here. Maybe I'll turn to you first. What are your thoughts on that?
Well, I don't live in the United Kingdom, so I can only watch from the outside what's going on. So I think one area where there's definitely a loss is that migrants have gone home to their countries of origin. So that means that the workforce is, of course, now reduced. You have this shortage of lorry drivers, for example. I would probably believe that many foreigners would have taken those jobs before Brexit. I've seen the same thing happening in Sweden, where they discuss migration and they kind of note that, for example, taking care of the elderly, you have in some regions 50% of the jobs taken up by foreigners, because apparently the pay is not so good and the local people want to work in something else. So yeah, I mean, with Brexit and with the idea that you kick out a couple of foreigners, I think that's what the framing was. If that happens, then you have less resources to work with. And then, of course, GDP will tend to go down and not up, because with less people, you can build less things. That's definitely something that I think is going on. When it comes to industry, of course, and also financial services probably are relatively stable, I would think. And industry, I mean, it's all about increasing returns to scale. And Britain, I think, has some pretty big car factories. It should not be affected much. But I don't know about the scarcity of vegetables, for example. So I've seen that in the news, but I couldn't say whether this is something which is the media is just using to show how Brexit was a mistake, or whether this is something which you really do experience in the United Kingdom. So maybe Patricia, you can jump in here.
Well, I have quite strong opinions about this, you see.
Good.
Well,
I'm not necessarily trying to, you know what I mean? I don't like to use the word. I'm definitely not a Remoaner. I haven't been going on about, we need to reverse it. I would say this is the first time it's come up, and it's just because it's come up in the news this week. Some sources have started piping up about some of this economic damage as a result of Brexit, and maybe these are sources with vested interests, but I just wanted to throw it out there and what's reasonable here,
I think Brexit was necessary. I'm going to start with that. But I also think that to make it a success, what needed to happen, was a acceptance or an embracing the fact that the government needed to have a much bigger role in shaping the economy, in creating employment, and in developing industry. That was never going to happen with the Tories on board, which is why I was so keen on Labour taking on Brexit as a left-wing project, because they could make the case for more government investment, for trade deals that were beneficial in a fair sense, not simply about, because part of my issue is that at the moment trade deals in the mainstream, they are assessed purely by their potential to generate profits for companies. And we needed a left-wing version of a trade deal, which was mostly about how do we create well-being? How do we negotiate, having a job guarantee in 2 different countries and, as the basis of a trade deal or something like that.
Do you mind me saying that, I think that might be a flaw with the Lexit movement, in that has there ever been a trade deal in the history of trade deals that's ever done that? NAFTA, I'm just saying, like, it's they're investor rights agreements. They're not trade deals.
Yes. And part of the problem was, I think, this is a political, obviously, discussion of what might have happened. And that's a bit difficult to know for sure. But it is true that the Lexit movement wasn't big enough, and it wasn't equipped enough, and people who you would have thought were natural supporters of it, even they sort of very early on capitulated to we're going to stay in the EU anyway, so let's just try and make the best of it. And I'm of a different idea. I think we had to leave, and I think we had to leave sooner or later. And the point is, how do we make the best of it now? And it's a shame. It's a shame that it has to happen under these circumstances, and nothing good was ever going to happen with the Tories. And I almost would much prefer the Tories not to build any trade deals than to building to create them under the current premise. I'm a bit worried about that. But again, I'm not an expert on trade, so maybe that's just speculation on my side.
I mean, obviously I'm out of my lane as well, as I usually am. but to me, it just seems like it's not like, is this a good deal or a bad deal? There are no deals. There's a complete vacuum where deals should be, and I think
there's a lot that we're not doing. I mean, even without looking at trade, the government is basically ignoring the fact that it has any role in developing industry. If we had that, potentially with less political resistance from single market rules, then maybe right now we wouldn't even be thinking about trade deals. What trade deals? Everything is going great. But because we are working in a context of austerity and in a context of a government that doesn't believe in doing anything good for people, then of course, if we're continuing with the same thing, if we have a framework which puts all the responsibility on the free market and then undermines that free market by Brexiting, of course things are going to be worse, But I guess it depends on what you put the biggest responsibility on.
And obviously that point shrivels a little bit when you consider there is no such thing as a free market. They're all constructed.
Yeah.
So turning the corner, at the recent UN Climate Summit, the Congress of Parties, the COP27, climate reparations are on the agenda, and there's this idea of establishing a loss and damage fund. So it's good to see that being pushed. But then it's also being resisted by the usual suspects. John Kerry this week was there, and in an interview, he said, well, you tell me the government in the world that has trillions of dollars, because that's what it costs. Now, Dirk, as an MMT economist, can you think of a government in the world that has trillions of dollars?
Yes, one comes to mind, the American government. But once again, the framing here from the mainstream leads us astray. We should talk about resources. We should talk about technology. So I think it would be probably more helpful for the developing countries and those who are affected most by climate change to receive from us resources directly and technology. I don't think that it is necessary to take this route or use money for importing this technology then from those European countries. I mean, if we can build something which they need there, just build it and send it over there, and then figure out the financing part later. It's very important because the climate change is coming. I mean, I think Europe is now warmer by roughly 1 degree and a bit than 40 years ago. So global warming has already affected us. You have seen the November in the UK, the November in Germany was roughly the same. It was way too mild. So this is all coming, and we cannot afford to discuss these issues again and again at these meetings. It's all a big failure. Change will not come from the top. Change will come from the bottom. I think that's the insight that we should all build upon. So we need people to go forward at the local level, I think. So in the cities, people should start to adapt. People should start to make sure that they reduce emissions also, of course, as much as possible. And I have no hope at all for these kind of high-level meetings where federal governments talk to each other. It's not going to work, because it's just too easy for the lobbies to influence those federal governments. If we want to have this kind of social, ecological transformation, we have to start at the bottom, and then we just have to move forward and see whether other countries are following up. I'm all in favor of kind of climate reparations, all these kind of things. But I think it's a lot of talk, and there's very little ambition to hit those targets. The only targets that we could hit in Europe, we hit because the Eastern Europeans, they lost their CO2 output because the industry was gone. So it was easy for us to get CO2 emissions below 1990 values. But everything that we have to do now is getting much more difficult. So that's my point of view. I did not follow these meetings a lot because I think that we had too many of them, and we should stop thinking that this would change anything.
So before we sign off, let me ask you both, what should economic policy activists in the UK and in Europe be pushing for now?
Yeah, first, the social dimension, I think. Make sure that people do not get left behind in this kind of crisis. Push for more income directed towards those who need it most. We all know that the government is the currency issuer, so no excuses. If the resources are there, or if more resources could be produced by bringing people from unemployment into employment, well, do it. I think that's easy to understand also for normal people who are not economists, that if there's idle resources and you can create money at zero cost if you are the government, it's a perfect match, right? And at the same time, of course, we need to make sure that everything is ecologically sustainable. So whatever you spend money on, if you are the government, please make sure that we do not get more and more dependence from these technologies that use a lot of energy or raw materials from resources that we cannot afford to use anymore. So I think these are the two most pressing issues. If I were consulting labor, then I would probably tell them that they need to come up with a plan. I just checked their website a couple of minutes ago. They have 5 bullet points, which is their plan for a better economy. But you have to move forward now. I mean, Mariana Mazzucato with her books, she's right. I mean, you have to have missions. And you have to have targets, and you have to hit those targets. We've been talking too much in the last couple of years in terms of politics and policies. It's time now to agree on targets that matter for us, for the 99%, and then try to get policies to reach those targets. I think that's a new approach of politics that we need. I would love to see that becoming more mainstream in the next couple of years. I
agree with a lot of what Dirk just said. But I see, I mean, in the UK context, obviously, I see Brexit as mostly an issue of not so much economic policy, because that can change any day, but of an issue of governance. And it was about who should be responsible for our laws. And now that it's happened, at the very least, what we do have is the fact that there's nowhere for our parliament to hide anymore. And, you know, they're in full control.
Amazingly, they're still finding places to hide. Oh, the markets made me do that. Oh, the bond vigilantes made me do that. Oh, and it's
created the OBR. Yeah, exactly. They're trying to replace that with something else. But there's nowhere for them to hide. So now we can truly, I would argue that the key thing is to advocate for a job guarantee, full employment, and of course to tackle excessive wealth and profiteering and all that. But I think to do that, there's nowhere for them to hide. But now the next step is to really push back against that narrative of we have no money, the austerity household narrative. Once we get that right, we can really make a lot of changes in this country, but not until then. So I would ask all activists on the left to resist that narrative, regardless of whether it comes from people on the right who support austerity or from people on the left who sometimes they adopt that narrative because they find it instrumental against the rich in some instances. I don't think it works in that way. So I would really, whoever is out there and understands MMT, to really push back against the use of that household analogies effectively.
Great stuff. And just quickly before we go, Patricia, you're on Mastodon now, and I guess we're all going to have to do that.
Are you on Mastodon, Dirk?
Yeah, I'm on Mastodon since April, I think.
Oh, I'm going to follow you.
Oh, yeah, I'm such a granddad.
I'll follow back.
I've just joined in.
Patricia, you start. Tell us what if this is the right word, sorry for being an old timer here, what's your handle on Mastodon?
I think it's called an address on Mastodon. I'm not in with the lingo just yet, but
sorry, kids. This is your grandpa here, trying to figure out how to talk about things.
I am on Patricia Pino at econtwitter.net. Which one are you in, Dirk?
I have no clue. No, actually, I found it. I'm at Dirk Ehnts at mastodon.social.
Great. I'll put the links in the show notes. We've been speaking with economist and author Dr. Dirk Ehnts, and we'll link to where you can stay current with his work and his Mastodon in the show notes for this episode. But for now, thanks so much for joining us today on the MMT podcast, Dr. Dirk Ehnts.
Thanks. It was a pleasure.
That was the MMT Podcast with Patricia Pino and Christian Riley. Don't forget, you can support the show through Patreon, starting at $1 a month and get access to patron-only episodes. You can do that by going to patreon.com/MMT Podcast. You can also find me on Twitter at MMT Podcast, and you can find Patricia on Twitter at Patricia N. Pino, and you can email us at mmtpodcast@outlook.com. Thanks for listening, and we hope to hear from you.